This is Series 1, Episode 51. Now, just to warn you guys before I start, this does get quite technical, but I think it's important for you to know what the market's doing and why it's doing what it is doing. So I'm going to start with the NASDAQ. This is a weekly chart on the NASDAQ. You see I have drawn this red area here because that's where we found resistance. So why is price stopping there? Let me show you. And people think that a lot of this is mumbo jumbo, but honestly, it's not. It's really weird how this stuff works, psychological levels. I'm taking a Fibonacci retracement tool, and on this weekly chart, I'm taking the high to the low, most recent low. What do you see on this chart? 61.8%. I've talked about that level before. Fibonacci. It's psychological for trading. Let me show you that on the daily so it's clearer. 61.8. Very, very clear. That is where price tried to break. Went up, stopped. Tried again, stopped. Tried a third time, failed. That is exactly why I think we're struggling, guys. And also, I will show you one more reason for that. There's a moving average, 50-day moving average. Another well-respected indicator when people are trading. So prices come below that line, as you can see here, and then come back up to try and break it. So not only do we have that 61.8% Fibonacci level, we also have the moving average. And price cannot break it at the moment. So I'm hoping that makes a little bit of sense. And by all means watch this video again. Let me just delete that all because it's horrible to have messy charts. And that area represents the area I just talked about, which is around 132.75. So that is why price is struggling there. But why did price come down in the first place on the technology stocks, NASDAQ? Well, I'll show you something else. This is really interesting and important. Let me just go up a little bit. So this is the 10-year Treasury rate, 54-year history. So the 10-year Treasury is the benchmark used to decide mortgage rates across the US and is the most liquid and widely traded bond in the world. Right. Why is that interesting? Because what happens in the US happens around the world. So if their interest rates go up in the US, they will go up in the UK and around Europe, etc. So this is why it's really important. This is a 5-year chart here. Look at the price, the yield. It's just gone lower and lower and lower. But the last 6 months, it's just starting to rally. So let me just show you that. 6 months. Look at this rally, and this is why there's so many jitters in the market at the moment, especially on technology stocks. Because what's happening is investors are starting to worry that if it's more expensive to borrow money, which is what this chart's representing, because you see the yields going up, if it's more expensive, then firms will start passing that cost of borrowing money onto the consumer. So food starts going up, everything starts going up, inflation kicks in, and your consumer, me and you, we start asking for more money from our employers, because we need to cover the additional costs of everything going up. And then there's a knock-on effect. Things start skyrocketing in price, wages go up, inflation starts. So then interest rates continue to increase to curb the spending, and then investors start saying, oh, okay, well, why do I need to invest my money in the stock market if I can get a good yield on my bank account? Or value stocks. So what they do is they start diving out of technology and these kind of risky stocks and diving into value stocks and potentially banking. So you've got your financial stocks, your retail stocks, your airlines, construction, and that's why, guys, you'll see me talking about more of these construction type of plays now and financial rather than technology, because you can see the money is turning, the money is rotating out of technology. So please just be wary of that. And when I'm talking about stocks now, you'll probably understand why I'm recommending for my own portfolio more around value stocks that are undervalued rather than technology. So I'm hoping that is a useful bit of information there, because this 10-year yield, that will, if interest rates go up in the US, they will have a knock-on effect around the world. So back to the NASDAQ. If we go below this red level, then we're in trouble for technology stocks. If we go above this one, things will definitely look better. So hopefully you'll understand my logic as to why I start buying these different stocks at the moment, just to try and diversify my portfolio. Hopefully this is useful, guys. If you like what I do, please like and subscribe, and I'll speak to you again very soon.